Hi everyone, Piers Bolger here, the Chief Investment Officer at Viridian. Well, March ended one of the worst months that we've seen on financial markets since the 1987 stock market crash. Our local equity market was down just under 21% for the month. The A-REIT market was down incredibly 35% for the month, an incredible decline when you look at the performance of that part of the market over the last 18 months or so. Global equities fared a little bit better. Global equities in Australian dollar terms was down roughly around about 8.5%. The decline in the Australian dollar, not only against the greenback but against other major currencies, provided some support to investors in regards to the overall investment performance. Cash and defensive bond markets continue to provide that relative stability across portfolios as we've gotten to see over the last couple of months. So continue to provide, as I said, that downside protection. And we just thought it'd be worthwhile just highlighting the extent of the volatility that we've seen through February and March particularly. And the attached chart just shows the daily moves of our local equity market since December of 2007. And you can see here just the extent by which the market moved over the course of certainly February and March, and relative to prior periods, even relative to the GFC, you can see it certainly was a lot higher, both on the highs as well as the lows that we've seen. From our perspective, when we look at that chart, it sort of says two things to us. It says that we need to be very conscious on managing downside risk, and we're very much focused on that in the way that we're constructing our investment portfolios. And secondly, it does afford us the ability to be able to look through a lot of the challenges that we're facing at the moment, to think about, well, where can we reposition portfolios? Where can we take advantages of some of the declines that we've seen in markets, particularly equity markets, and reposition for growth as we move through this. Our core view still remains that we will ultimately overcome the challenges that we're seeing. Economies will ultimately move back into a growth phase, and that will be reflected in financial market performance. Certainly, as we sit here today, the next 3 to 6 months, and certainly longer, probably in a real economy perspective, are going to remain very, very challenging. But just given the extent of fiscal stimulus the government's provided, as well as obviously central bank support, which from our perspective is showing no signs of abating, we believe that ultimately that will be beneficial for economic development, for industrial production, which will ultimately flow through in regards to financial market performance. So from a portfolio standpoint, we certainly remain very focused on that medium to long-term horizon. We want to be able to capture, as I said, that upside, not knowing when it's going to occur, but certainly we don't want to be too defensive in our portfolio positioning at this point in time, albeit, as I said, that we are certainly very much focused on managing to the downside. As always, please feel free to reach out to your advisor if you have any concerns about your investment strategy or your portfolios. We'd love to hear from you. This is our last video before Easter, so we'd like to wish you, as I said, a happy and safe Easter, and we look forward in catching up again after that. Thanks and bye for now.